I didn't do I didn't record. Let me see. All right. So just for the recording purpose that I've just begun, I'd like to just mention what we are talking about tonight. And I am saying that I'm reviewing this particular question, why you will not fail in Forex trading, or if you want to remove these things in the bracket, why you will fail in Forex trading. And by doing so, you need to understand about the 90-90 rule, which I've said basically the 90-90 rule is 90% of Forex traders lose 90% of their investment in 90 days, all right? And in fact, it's worse than that. Within 1 week, 75% of retail traders actually lose their money. And the rest who survive longer will not survive more than 90 days. So if you have been trading and you have survived more than 90 days with your investment, consider yourself probably among the 5% or the 10%, all right? So tonight what I'll be looking at and what I'll be answering in this particular training briefly is to look at a few areas and a few things that 10% of the retail traders do that the 90% don't do. And I wanted just to highlight one point, that this is not unique to Forex trading. It's actually applied to any industry that you would like to succeed. If you would like to be like Kipchoge, for example, and beat the world records, there are things that Kipchoge does that not every other runner does, all right? And that is why Kipchoge succeeds. So, and it applies to every industry. I was talking about employment. If you are in employment, if you are employed, you can be sure that in your organization, the organization that you are working for, there is only one CEO, all right? And then the rest of us are the workers down there and so on and so forth, all right? So even in employment, only 5% of people succeed in employment. If you talk about any business, matatu business, name it, farming, or whatever it is that you do, there will always be what needs to be done in that particular industry in order for you to succeed. So that also applies to foreign exchange trading. So just to reiterate what I've just described about the 90-90 rule, we are saying here that 90% of retail traders lose 90% of their investment within 90 days. Okay, that's about 3 months. Okay, but in reality, actually most people, 75% of the people, that's within one standard deviation of the normal distribution curve, lose actually that 90% of their investment. Now, some of the things that you need to know about Forex trading, and this is one of the key areas that you need to understand in order to know, in order not to be part of the 90%. First of all, you need to understand the statistical nature of trading, all right? Every time we put we place a trade in the market, we are actually betting into the market to see whether we will actually win on that particular trade. And what we do is that we target to win most of our trades, okay? But the reality is, irrespective of what strategy you are using, the best you can achieve is normally maybe 75% win rate, okay? And you will be losing probably 25%. If you have a strategy that can actually give you that kind of win rate, then you are home and dry. The only thing that you now need to know, you now need to do is to make sure that the amount of money you make when you win is more than the money you lose when you lose, all right? Unfortunately, most of us is that these 25% of the trades that are losing us, lose us more money, more than 3 times what we have made. So you become a statistical, you enter into what is called a statistical failure, all right? So those are some of the things that one needs to look at in terms of the strategies that they're using. Now, the other thing that is also very important is, if you check about fund managers, people who actually trade in the market, professional fund managers normally do an average of 2% growth per month, all right? I'll come to why I've mentioned that briefly later. But basically, how much is your account and how much you are expecting to make is also very key in how you will succeed in trading your account. And I'll mention that slightly briefly later. Now, those who invest less expect more than those who invest more. I'll also clarify that a little bit more. But let me come back to the issue of the 90-90-90 rule and how it affects trading, retail traders, and their relationship with brokers. All right. Now, because these statistics is understood, especially by brokers, what do you think brokers will do when they know that 90% of retail traders lose their money? They basically will take the opposite of your trades. That means every time you are buying, the broker on the other side will have taken the opposite of that trade of yours, meaning they will not take your trade to the market. All right. Now, so what brokers basically do is that since they know that 90% of retail traders will lose their money, they never take your money to the market. They never take your trades to the market, meaning that they will just wait for you to lose your money, and within 90 days, whatever investment you had given them, that is their money. All right. And more statistics have actually been studied by brokers. And it's been found that any person who invests less than $5,000 will normally fall under the category of these retail traders that come in under the rule of 90-90-90 rule. All right, which is interesting. It's a sad situation, but that's the reality. 90% of traders who invest less than 5,000 will always lose their money. Now, I don't want to discourage you today, and I'll tell you, and I'm not trying to tell you today that start by investing $1 million into your Forex account. No, in fact, I still insist that if you are a new trader, don't start with more than 10,000 Kenya shilling or say $100. Do not put more than $100 in the market when you are beginning to trade. Trade with $100 and see how the market will work out. And I can tell you confidently that you should consider that $100 as your school fees. All right. That is the only way you can learn this market. All right. Now, most of these accounts close in less than a month. This is how brokers make their money. Now, this is very critical for you to understand. It's very important for you to understand how brokers make their money. Brokers make their money, most of their money, the majority of their money from retail traders. That is you and me who are investing anything less than 5,000. All right. It is therefore in their interest that you trade often, that you lose the money, go back, learn a little bit, realize that your mistakes, bring in more money, lose, you go and learn again, lose your money, come back again, go lose your money again. And that is how brokers are making their money. And how do they encourage you to trade more often? By providing training seminars, all right? So you'll find that most brokers, some of the brokers, and it is not a bad thing. I mean, of course, we attend this training and they help us, we learn, and it's a learning process. But for the majority, they never even learn during those learning seminars that the brokers actually give, all right? So brokers encourage you to do this. So they sponsor many training seminars and so on and so forth. And so that is something that you really need to bear in mind. Now, how will you break this cycle of you pumping your money into brokers, making money out of you? How do you break the cycle of being among the 90% of retail traders? And those are the things that I just want to briefly discuss with us today. All right. Okay, so reasons why you will not fail. Okay, so I come to my main topic tonight, and that is one of the reasons why you will not fail. And one of the reasons is you will not be using signals from signal providers. I know that is, I know within our team, okay, I'm part of the Fierce Scalping team and Fierce Trade House, and we give a lot of signals. Now, I'm also saying here, so is it a paradox, or is I am saying what I am not doing? But before you take a signal from a signal provider, it is very critical and very important for you to understand how that particular signal was arrived at. Then you can take the signal. But if you are just taking signals from signal providers, whether they are paid or otherwise, or free, that is one way of losing your money. The other point is, understand the statistical nature of trading. And the statistical nature of trading is, irrespective of how good your strategy is, there will be times you will lose. There will be times you will lose. So what you need to do is, what you need to make sure your strategy delivers is that whenever you are making money, you should be making more than when you are losing the money. All right? Now, the second point, investment level, okay? And I don't want to belabor this. This is what I've just mentioned before. And the reason why I say the investment level is this. Actually, there is no difference whether you are investing $10,000 or $100. If you understand what it means. Somebody who invests, and the reason why retail traders who invest small amounts lose is because their expectation is more than reasonable. You are expecting what is not reasonable. For example, you are investing $100 and you expect that $100 to grow to $200 within 1 week. That is madness. You cannot expect that to happen, all right? Any trader who is in the foreign exchange market and is a serious professional trader knows that if you can even achieve 2% per day, that is a miracle, all right? That is too good to be true. And we can say that in Forex, by the way, Forex is so good that it can deliver actually more. In fact, if you trade Forex correctly, you can actually even do 10%. But I'm telling you, those figures are on the higher side, very higher side, all right? So the main problem why retail traders lose is because they invest $100 or even that $5,000 and expect to make a fortune within that specific time. That is madness. Don't do that kind of thing, all right? So if you are investing $100, how much is 2% of $100? $0.2. That means if you make $0.2 per day on your $100, you should be happy, all right? And you should close your trading and go home, all right? Anyway, that is my view. I hope you are getting it. By the way, if you think you are getting value in what I'm telling you, you can put there 222. Okay. The second point is leverage. Of course, leverage comes necessarily out of how much you are able to, how much you are trading with. Okay, so if you are trading with $100, don't place a trade that is more than 0.01. Okay, and we always say that. Actually, you should trade less than that. In fact, if you have $10,000, you shouldn't even trade a standard lot. You should be trading a standard lot. All right. So leverage is very key. In fact, many people, this is actually what draws people to lose their money. You double your account within your $100 within 2 days. In the third day, you actually lose. In fact, let me give you a simple example. Let me give you my personal experience. The first time I joined Forex, I invested $1,000. All right, I invested $1,000. And because I didn't know this issue about leverage and level of investment and expectation, I doubled, I actually tripled, I didn't even double, I actually tripled the account within 3 days. 3 days, I tripled that account. I had $3,000 on the 3rd day. But tell me what happened to me before the end of the week. I went to zero, okay? I went to zero. I can see somebody is typing. How do we wrap these things? People are typing on the screen. There is a duster, I think. Eraser. Okay, so that is very key, what you do on this. Okay, so the second point that I want to make here, let me see. I need to remove that. All right, having a trading strategy. The second point that I want to make, you need to have a trading strategy, okay? Get a trading strategy. For example, I train on the London daybreak strategy. It's a very powerful strategy. In fact, when I came across this strategy, that's where I'm focusing all my focus right now until I master that particular strategy. And why am I doing that? Because the pound moves during the London session and gives you enough pips that you can actually go home with. All right. So anybody should come up with your own trading strategy. There are millions and millions of strategies. The London trading strategy is only one out of so many. All right. So make sure you have a trading strategy. What is a trading strategy? It means you have a strategy that when you wake up every day to trade, you know exactly which currencies you are looking at, what indicators you are looking at if you are using indicators, what price action you are looking at if you are looking at price action, what levels you are looking at, if it's candlesticks, which candlesticks are you looking at. Make sure you have a specific trading strategy that will make you the money. The problem with us is that we always jump from one strategy to another one. We always think that our strategy is the wrong one. By the way, there is no correct strategy. There is no foolproof strategy. There is no one strategy that will deliver the goods, all right? Each strategy works provided you zero in on it and master that particular strategy, all right? Okay, the next one is psychology. Psychology basically means be in the right state of mind when you are trading. All right, be in the right state of mind. Make sure that you are comfortable, you are not sick, you are not having a running stomach. Okay, I mean, sorry, but make sure that you are in the right state of mind when you are trading. All right, otherwise you will end up losing money when you didn't want to lose money. Now, I've been told that my time is coming up within 10 minutes, so I'll finish this within 10 minutes. Now, the last one, and it's very important, and in fact, I've colored it here, that you need to have a mentor, okay? You need to have a mentor or mentors. Now, that is where I Am comes in. That is where I Am Mastery Academy comes in. I Am Mastery Academy has more than 100 top traders in the world who can trade with you every single day. Now, when I came across I Am personally, and I realized that the people that I'll be looking at inside this particular platform are successful traders. They are successful traders, all right? And in fact, in mentorship, who do you allow to mentor you? Do you allow a failure to mentor you, or you allow somebody who has succeeded to mentor you, all right? And some of you are going to quacks here in Nairobi who have training schools or who have training whatever, and that they will help you to trade, and they will teach you to trade. No, nobody can teach you to trade if they themselves are not making money in trading. That is why I Am platform is the best platform for you to zero in and pick 1 or 2 or 3 or 4 mentors that you can follow to succeed in Forex trading. Now, if you don't do any one of these, I will guarantee you, you will fail in Forex trading. But if you do what I've told you today here, let me tell you, success is guaranteed for you. It's in the same methodology. So mentorship, you need to get mentorship from somebody who has succeeded and somebody who is succeeding in the industry, and the right platform for you to do that is in IAM. Okay. The other thing that I also want to mention is that even in mentorship, don't accept even your own advice. All right. When it comes to mentorship, get the mentorship from a mentor. Basically, I have done my training tonight, and that's it. On Monday, we will, I think we have a full schedule that we will be running here, and we will provide all the tools that are necessary for you to succeed. I commit to be able to do trainings on trading and on trading psychology and so on, whatever other things that I will have on Tuesday, Thursday, and Sunday. Okay. And on Monday, Wednesday, and Friday, we will be doing our business opportunity through the IAM platform. So thank you very much. Thank you very much, everyone who is here. If you got value on this, value with this, type in there 555. I really appreciate each one of you for coming on. And thank you very much. Let's encourage each other. I will post this online. I'll also post the PDF for this particular training, and so you can be able to refer to it at any given time. Otherwise, for those of us who are in IAM, make sure your subscription is up to date before Tuesday. All right, and so you will be able to enjoy the low prices before the increase. Actually, the prices are increasing by $10, okay, both for joining and for monthly subscription. So if you can, thank you very much for that. So thank you very much. Make sure you are well subscribed. Make sure you join at 10 o'clock. I think there will be the mastery or overview of the market, okay, through the IAM platform. And tomorrow morning there will be the mentorship by the chairman of the IAM platform. So thank you very much. God bless you and good night. Thank you, everyone. Thank you, everyone. Mtoto wangu hakushughulikiwa, mimi ndio kusikiliza madaktari, nikakuuliza